Hey, welcome. Today, we are going to break down a really specific trading strategy. Think of it like a map for finding one of the trickiest things in the market, a trend reversal, and spotting it before it takes off.
You know the feeling, right? Every trader's been there. You're riding a strong trend, everything's going great, but you've got that voice in the back of your head saying, this can't last forever. The million-dollar question is always, when's it going to turn? Because guessing wrong is painful, but nailing it, well, that's what it's all about.
And that's exactly where this strategy comes into play. It's designed to take the guesswork out of the equation. It gives you a playbook, a clear sequence of events to watch for. So instead of a super complex formula, just think of it as learning to read the story that the market is telling you, one clue at a time.
Okay, so clue number one is what we call a liquidity sweep. Here's the deal. A whole bunch of traders, they place their safety nets, their stop losses, just above a recent high or just below a recent low. It's an obvious spot. So the big market players will sometimes push the price just far enough to trigger all those stops. That little move, that quick grab, is often the very first sign that a trend is getting tired and is about to turn around.
And you know what? That liquidity sweep often forms the absolute centerpiece of our next clue, the classic head and shoulders pattern. I'm sure you've seen it. You get a peak, that's the left shoulder, then a higher peak, that's the head, and then a lower peak, the right shoulder. It's a picture, really. A picture that tells you the momentum, the buying or selling pressure, is starting to fade. It's setting the stage for a big change.
All right, let's get into the weeds. Here it is, the whole playbook on one slide. It's a 5-step process. We're going to walk through each one, from spotting that very first signal all the way down to pulling the trigger on the entry. So let's break it down. First things first, step one. This is all about finding that initial signal. Honestly, this part is mostly about patience. You're just watching, waiting for the market to give you that first little wink that a change might be on the horizon. So, your job is to keep your eyes glued to those obvious peaks and valleys on the chart. You're waiting for the price to just poke past one of them and then, bam, it pulls back quickly. That's your signal. That's the liquidity sweep. And now, the hunt is officially on.
Okay, so we've seen the sweep. Now let's see how this whole pattern actually starts to build around that one key event.
Remember that liquidity sweep we just talked about? Well, that big, powerful move, that is the head of our pattern. The little peak right before it, that's our left shoulder. And the smaller peak that forms after the market pulls back, you guessed it, that's the right shoulder. And just like that, you've got the classic shape that's screaming, hey, the momentum here is dying. Now, seeing the pattern is one thing. That's great. But it's absolutely not enough to just jump in. We need confirmation. We need hard evidence that the market's underlying structure is actually changing. And that proof has a name, a break of structure, or BOS for short. What this means is, after that head is formed, the price doesn't just dip a little. Oh no. It has to come crashing down right through the last important low point of the uptrend. See, this isn't just a minor pullback. This is the market making a loud and clear statement that this reversal is the real deal. So, how do we measure if this break is significant enough? We use a handy tool called the Fibonacci retracement. You just draw a line from the base of the move up to the very top of the head. Now, that 61.8% level you see here, that's a key mathematical point. If the price breaks below that level, we consider it a really significant move. It's a very strong sign that this reversal has some serious legs. And look at this. If that break is even stronger, if it plummets all the way down to the 78.6% level, well, that's an even bigger signal. At this point, the market isn't just hinting anymore. It's practically shouting from the rooftops that it wants to reverse. This tells you you're looking at a very, very high probability setup.
So we've got our signal, we've got our pattern, and we've got our confirmation. Now, the biggest trap here is getting excited and jumping in too soon. The final two steps are all about discipline. It's about being patient and letting the market come back to you for that perfect entry. Okay, so after that big, powerful break of structure, the market almost always pulls back a bit. It kind of takes a breath. Our job is just to sit on our hands and wait patiently for this pullback. As the price drifts back up towards our area of interest, it forms the final piece of our puzzle, the right shoulder. This is our zone. We don't act yet, but we get our mouse ready. And this, right here, these are the final, non-negotiable rules for entry. It's totally mechanical. Notice it says PSR. That just stands for previous support and resistance. So for a sell, price has to pull back. But, and this is key, it has to fail to get above both the 23.6% fib level and that PSR point. Then you look for a specific rejection candle. For a buy, it's just the mirror image. No emotions, no guesswork, just simple, clear rules.
You know, a great entry is only half the story. A real strategy always includes a predefined exit plan. You have to know exactly where you're getting out before you even get in.
In this strategy gives us two very clear targets. Take profit 1, or TP1, is right at the level of the left shoulder. That's a logical spot where the market might pause or react. Then take profit 2 is aimed at the new low or high that the reversal itself is creating. It's a simple, logical, two-part exit plan. Now, here is a fantastic piece of wisdom that really ties this all together. This whole pattern, as powerful as it is, becomes 10 times more powerful when it lines up with the bigger picture. So if the daily chart is already trending down and you spot this bearish reversal pattern on a 1-hour chart, man, you've got a serious tailwind at your back. Context is everything.
So there you have it, a complete step-by-step map for potentially spotting a market reversal. But you know, a perfect strategy on paper is totally useless if you don't have the discipline to follow it. So the real question isn't just can you see this pattern, it's do you have the patience to wait for every single piece to fall into place before you make your move? Because that's the real secret.